Welcome back, guys, to my YouTube channel. It's your boy Forex, never read ever blue. On today's video, we're going to be discussing a beginner's guide on Forex Part 1, where we're going to be looking at 5 major topics that every beginner's Forex trader needs to know, which are the meaning of Forex, currency pairs, sessions, base and code currencies, and market participants. Then the next YouTube video to come, which is going to be the part of this video, we are going to then look at other crucial topics such as the bulls and bears, margin, leverages, brokerage companies, etc. So without wasting much of your time, let's head straight into the talk of today. What is Forex? Foreign exchange, or Forex, or FX, is the trading of one currency for another, or you can simply say that it is the buying, it is the simultaneous buying and selling of a particular currency to another currency. Example: GBP to USD, USD to JPY, Euro to USD, etc. Forex, guys, simply entails the foreign exchange of currencies of different nations of the whole world. That's what it simply entails. In all the financial markets in the world, it is the largest financial market with a daily liquidity of over $5 trillion every day. It is even bigger than the New York, Tokyo, and London stock markets. The Forex market is really enormous it's really enormous, and it is bigger than the biggest stock markets out there. It is a 24/5 industry, that is, it runs for 5 days in a week and are usually closed only on the weekends, which are Saturdays and Sunday, and providing for you an unlimited amount of time to make money literally every day. What is traded in the Forex market? Money is what is being traded in the Forex market. That is currencies of different nations of the world. That is what is being traded in the Forex market. And these currencies are usually represented in 3 letters, where the first 2 letters represent the country's name and the last letter represent the currency pair, represent the currency of that particular country. Example, where we have the GBP, where the GB represents the country names, which is Great Britain, and P represents pounds. Then we also have USD, where US represents the country name, which is USA, and D represents dollars, making it USD. Then we also have AUD, where the A represents Australian, that is the country name, and the D represents dollar. Then we also have JPY, when the JP represents Japan and the Y represents yen. Then we also have CHY. Then we also have CHY, where the CH represents Chinese and then the Y represents yen, etc. That is how we write. That is how currencies are written in the financial market. And also in the financial market, the money that is traded are traded in pairs, that is currency pairs. And examples of these currency pairs include GBP USD, which is British pounds versus US dollar, and his nickname is called Cable. We also have Euro USD, which is Euro to US dollars, and his nickname is called Euros. We also have USD JPY, which is US dollars to Japanese yen, and his nickname is known as Dollar Yen. Then we have USD CHF, which is US dollar Swiss franc, also known as Swizzy. We have USD CAD, which is US dollar Canadian dollars, also known as dollar Canada. We have AUD USD, which is Australian dollar versus US dollar, which is also known as Aussie dollar. Then we have Euro JPY, which is Euro to British pounds, which is known as Euro sterling. Then we have Euro to JPY, which is Euro to Japanese yen, which is Euro yen. Then we also have Euro to CHF, which is Euro versus Swiss franc, which is Euro Swiss. Then we also have GBP to Swiss franc, which is sterling Swiss. So all these are all examples of currency. All these are all examples of currency pairs. Because remember, guys, that we said that Forex involves the buying and selling of 2 currencies. So hence they are usually in pairs. Now there are basically 3 types of currency pairs. There are basically 3 types of currency pairs, which are the major pair, minor pair, and exotic pairs. What are major pairs? Major pairs are simply the currency pairs that are mostly traded in the around the world, and they usually contain US dollars in them. Examples of such currency pairs include Euro USD, which is Euro versus dollar. Then we have GBP USD, which is Great Britain versus US dollar. We have USD CHF, which is US dollar versus Swiss franc. We have USD JPY, which is US dollar versus Japanese yen. we have USD CAD, which is US dollar versus Canadian dollar. We have AUD USD, which is Australian dollar versus US dollar. Then we have NZD USD, which is New Zealand dollar versus US dollar. All these that we just listed are all examples of major currencies. That is currencies that contain US dollar in them and are usually traded the most. Now move on to the next, which is minor currency. What are minor currency pairs? Minor currency pairs are pairs that are not as heavily traded as a major currency pair, and they usually don't contain US dollars in them. And examples of minor currency pairs includes, here we have Euro JPY, Euro CHR, Euro CAD, Euro AUD, Euro NZD, Euro JPY, Euro GBP JPY, CHF JPY, CAD JPY, AUD JPY, NZD JPY, GBP CHF, GBP AUD, GBP CAD. All these are all examples of minor currency pair. They're not really as traded as the heavy. They're not really traded as in major pair, and they usually don't contain US dollars in them. That is minor currency pairs. Then the last but not the least, which is the exotic pairs. Exotic pairs are currency pairs of exotic pairs are simply pairs of nations of underdeveloped or developing countries of the world that are crossed with US dollars, and these currency pairs are usually not traded the most. Examples of such currency pairs include USD CNH, which is United States to China. We have USD SGD, which is United States to Singapore. We have USD HKD, which is United States Hong Kong. We have USD KRW, which is United States to South Korea. We have USD THB, which is United States to Thailand. We have USD MYR, which is United States to Malaysia. All these are all examples of exotic pairs. These are pairs of developing or underdeveloped nations that are usually crossed with US dollar, and they're usually not traded that so called. It's going to be very hard for you to see people trading such exotic pairs. Then we also have a special kind of currency pairs, which is known as cross currency pairs. Cross currency pairs are those currency pairs that do not contain US dollars in them. And examples of cross currency pairs, we have the Euro crosses, we have the JPY crosses, we have the GBP crosses, we have the CAD crosses, we have the AUD crosses, we have the NZD crosses. So examples of Euro crosses, we have examples of Euro crosses include Euro GBP, Euro CHF, Euro CAD, Euro AUD, Euro NZD, Euro JPY. Then we also have JPY crosses. Examples of JPY crosses are simply CHF JPY, AUD JPY, GBP JPY, CAD JPY, NZD JPY. Then we have GBP crosses. Examples of GBP crosses include GBP AUD, GBP CHF, GBP CAD, GBP NZD. Next is CAD, which is Canadian dollars crosses. Examples include CAD CHF, AUD CAD, NZD CAD. Then we have AUD crosses. Examples include AUD CHF, NZD CHF, and the last but not the least is NZD crosses. Then where we have NZD CHF. All these are all examples of cross currency pairs. That is currency pairs that don't contain US dollars in them. That is cross currency pairs. Although they are not particularly a type of currency pairs, because if you observe, guys, they're all under minor currency pairs also, but they all have their own crosses. They all have their own individual crosses. Now, so that moves us to the next topic of today, which is session. What is session? Session is simply the period of time when the markets open across the different geopolitical zones of the world. That it is during these sessions that's when the markets move. It is during the opening of the session that is when the financial market has its volatility to move, because it is session that gives the markets that gives the financial market, that is the forex world, its volatility to be able to move. When the sessions are closed, there is no movement in the markets, and there are basically four kinds of sessions. Which are the London session, New York session, Sydney session, and the Tokyo session. And the most busiest of them all, that is the session that is usually traded the most, is the London session, followed by the New York session, then the Sydney session, and the Tokyo session. Though the Sydney and Tokyo session are not really as traded as compared to the London session and the New York session. And so if you are living in London, then you trade with the London session. If you are living in New York, then trade with the New York session. If you are living in Australia, then you trade with the Sydney session. And if you are living in such Asian countries such as Japan, China, Korea, etc., then you trade with the Tokyo session. That is it, guys. And there's something, and in session, then we have what we call overlapping of these sessions. Overlapping of session is simply the period of time when two sessions collide with each other to form a super session. And it's during the collision of the super session, then that is when there tends to be higher and great volatility in the market, giving an opportunity to make money much more faster and also to lose money much more faster. And there will be basically two kinds of overlapping sessions, where we have the London and the New York overlapping session, and we also have the Sydney and the Tokyo overlapping session. But the greatest and the most volatile overlapping session of them all is the London and New York session. Just imagine them colliding together to form a supersonic session, where the volatility of the market is so high, where it gives the market so much volatility, so much movement. Because in the financial markets, when there's high volatility in the market, it simply means high opportunity to make money, and when there's low volatility, low opportunity to make money. At the end of the day, but they are all vice versa. Now, guys, let's look at the opening and closing of this session. London session starts by 8 a.m. GMT and closes by 4 p.m. GMT, while the New York session starts by 1 p.m. GMT and closes by 9 p.m. GMT. Then the Sydney session takes over by 10 p.m. GMT and closes by 6 a.m. GMT, while the Tokyo session then opens by 12 a.m. GMT and then closes by 8 a.m. GMT. And now, as we can see on the chart over here, of London to New York session occurs during 1 p.m. to 4 p.m. Then while that of Sydney occurs during 12 a.m. till 6 a.m. So if you are looking for the best time to trade forex, guys, is during the overlapping of these sessions but at the end of the day, but it's much better for you to trade forex during the overlapping of the London and New York session. That is from 1 p.m. GMT till 4 p.m. GMT, because that is where it gives you more opportunity to make money, because that is where the market is at its peak volatility and near its highest volatility, guys. So that is basically all about sessions. Now we move to the next topic, which is base and quote currency. Currency pairs are made of currency. The currency on the left hand side is usually called the base currency, while the currency on the right hand side is known as the quote currency. And the base currency are usually stronger than the quote currency. Hence, when you hear someone saying we are buying a particular currency pair, what it simply means is that they are buying the base currency to sell the quote currency. And when you then hear that they are selling a currency pair, it simply means that they are selling up the base currency to buy the quote currency. Because as a trader, your main purpose as a trader is for you to always your main purpose as a trader is to gain the stronger pair. So you are currently looking for the currency that has more strength. So you are not looking for weak currencies, rather you are looking at the currency that has more strength. Hence, when we say buy GBP USD, what it simply means is that you are currently buying the base currency because it is stronger than the quote currency, and you are then selling off and you are then doing away with the quote currency, which is US dollar, because it's currently weak. Same rule applies also when you are selling USD. Same rule applies also when you are selling GBP USD. It simply means that you are currently selling GBP. It simply means that you are currently selling GBP to buy to getting paid in US dollar. Why, guys? Because US dollar is, and that is US dollar is the quote currency, saying it's currently strong, and the base currency, which is GBP, is currently weak. That is why you sell GBP. So that is all about base and quote currency. Now we move to the final talk of today, which is market participants. There are basically four major market participants in the market, and the first one are the governments and central banks. The government and central banks, they are involved in the financial market to be able to control the economies of their country. That is, they are involved in the forex market not for profit reason, but for non-profit reason, just so that they are able to control the economic of their individual companies. Of their individual countries. That is to be able to stabilize the currency of their country by either increasing or decreasing interest rates. That's why they play a key and crucial factor in the financial market. Then the second participants are the commercial and investment bank. This large bank, they trade with billions and billions upon millions of huge assets every day, guys, within themselves and with their customer, and some of them also speculate in the forex market, hence granting them huge influence in the high influence in the forex market. Then we also have the large corporations. Large corporations such as international corporations or national corporations, they usually deal with large amounts of money, huge amounts of assets, and when they move these assets into different banks, both nationally and internationally, they actually tend to affect the currency rates of the financial market. Hence, they play a crucial role in the forex market also. Then the last but not the least market participants are we individual traders or retail traders or speculators. Now, we are simply in the game. We are simply in this game just for profit reasons only and nothing else. We are not in the game to regulate any one economy, rather we are just in it for our own self-benefit, that is to gain profit from the market. And the trades that we take as individual players in the forex market usually don't have a high impact in the financial market as a whole. Why, guys? Because we are individual, because we don't have such huge large amount of assets compared to the central banks, compared to the large corporation, compared to the commercial banks and the rest. But although there are some individual traders that has large amounts of money, such as usually earning in billions upon billions of dollars, such as George Soros, Paul Tudamon, where they trade large huge amount of assets every day. Well, guys, their trade can actually have can influence in the financial market, but the normal speculator, that is we normal real estate trader, but we usually don't have a say in what the market does. Our trade, we usually don't have any high major influence in the financial market, guys. So I've actually come to the end of this YouTube video. I hope that you really enjoyed it, and if you actually enjoyed, then why don't you go ahead and like this video and share to your friends and family and loved ones, so that they can also be able to benefit from this video also. And don't also forget to subscribe to this YouTube channel, so that you are going to be among the first people to know when I release new educational content. Thank you guys for watching. God bless you. See you in the next YouTube video to come. Peace out.